What's up, traders? It's Kaya Trades, and today I got a special video for you guys. A lot of you have been asking me how I enter my trades, so I'm going to take you guys on the charts to see what it looks like when I take my entries for a supply and demand strategy. Let's go ahead and hop onto the chart. First things first, when I enter my trades, I always enter my trades at the same time zone, if that makes sense. So I never trade pre-market before 9:30, which is New York open, and I try my best to trade no later than 11 o'clock. This past month of April, a lot of the trades have been showing up and presenting around 10:30 a.m. But as of right now, we're just going to focus on right after 9:30 window. All right, so to start off, we're going to go back and even figure out where our time frame is and how we even identify our setup. So the first thing that we want to do is figure out the overall trend. So when we're looking at the markets and we're looking for the trend, we want to see price either go up, make a high, create a low that's higher than this previous low, so a higher low. We want it to make another high, a high higher than this one, so a higher high, and then another lower high, and then a higher high, higher low, high high, higher low. In this example, this trend is going up. This will be considered a bullish trend. Okay? The inverse to that would be a bearish trend. So we want to see price make a low, make a high lower than the previous high, so a lower high. We want to see price make a lower low than this one, and a lower high than that one, lower low, lower high, lower low, lower high, so on and so forth. And this trend would be considered a bearish trend. Okay, I'm going to type those out for you guys just so you can see them a little bit clearer. That is our bearish trend when the price is going down. And then we have our bullish trend when price is going up. So if we're just paying attention, I'm going to leave that here for just a second, but I'll delete it in a moment. If we're only looking from this zone to this zone, what can we tell about this trend? Okay, is this trend going up? Let's see if I can move this whole thing. Perfect. Only in this orange box is the price going down or up. Obviously, I just gave away the answer. That price is going down. So my initial start coming to the charts, even over here, like price is just coming down. So we started off in a bearish trend. This is on the entry time frame that I take, the 5 minute. So we're just going to zoom out just a little bit in order to see if this trend follows the same trend as the higher time frame. The higher time frame that I'm going to use today is the 1 hour time frame. So on the 1 hour time frame, from here to here, or even overall, we can clearly see that the market is going down. Okay, we have a high up here, we make a low, a lower high, lower low. This high comes up above it, but generally, look at this next drop. Lower low, lower high, lower low, so on and so forth. And even right in the middle of our zone that we're looking at, price is going down. We are in a overall bearish trend. I want you guys to take a good look at this blue line that I have here though. It's going to be very important on what happens next in our trade. So we're going to go back down to the 5 minute. And since we've already identified that the trend was bearish, we are now going to wait for 9:30 to take place. We're going to see if we can catch a supply setup because supply zones are created in a bearish trending market. So let me put that at the top so you guys can understand it real quick. So supply zones are for bearish trending markets and demand zones are for bullish trending markets. We're going to see a few examples of that today. So now that we've already identified one, my trend is bearish, I'm going to look left. So I'm looking left and I see that prices came to this area and reacted from it a couple of times. It reacted here, and even with this same next level, price reacted here. So I'm gonna mark those out with my blue lines, boom and boom. So now we have some areas of support. Support is when price is trying to go lower, but something is holding it up. It's helping it hold itself up. This is considered our support area. The inverse to that would be a resistance area. So let's say price was trying to go higher, but this little line right here was preventing it from going higher. It was just staying right below it. That would be our resistance level. So currently we have a supply level here and a supply level here. Very important zones. So now, even though I've decided that we're in a bearish trend, even on the higher time frame, we've come in contact with two very important levels. We have a support level here, we have a support level here, and price literally did not close underneath it. That means price was trying to go down, but the market is like, no, I'm not ready to go down yet. So how do I know when to get into a trade? The next thing I want to do is wait for a break of structure. As I wait for my break of structure, what does that kind of look like? The number one thing you need to learn with trading is about market structure. Okay, so we already identified what lower lows and higher highs are and what trends are, but now I want you to pay attention to your current screen now. We made a high, now we made a low, high, low, high, low, high, low. We're going to stop right there. These are called swing highs and swing lows. When I want to see in a bullish trend is the price to go up, breaking structure to the upside, breaking this high, breaking that high, breaking that high. The break of structure would be the new creation of the new high in a bullish example. And then I'll show you the bearish one as well. Boom. So when we're in a bullish trend, which currently we're in a bearish trend, we want to see price break this high. And did it? Abso-freaking-lutely. Price came to this level and broke that high. Boom. That's a break of structure. Price does it again. Boom. That's a break of structure. Price is doing it again. Boom. That's a break of structure. So as we're looking for the downtrend, we're looking for breaks of structure to the downside. Boom. Market did that. Boom. Market did that. I'm going to erase some of these lines so you can kind of see it a little bit more clear. Price came and broke structure. Now, as we can see, we have these long wicks and we have these strong bodies. Your break of structure is highly probable to work out, more likely, obviously probability, if you have a big body break. So when we got this body break, the first thing we wanted to do was create a supply zone because we're in a bearish trending market. So I'm going to take the most previous opposite color candle. I choose to do it from wick to wick, and that would be our new supply zone in a bearish example. So I would wait for price to come back to this level. But oh no, price broke through that level. Okay, that was still an opportunity to get there. If you were paying attention, you probably could have got in right there. But for this example, I'm going to show you why I would not have taken this supply zone. We came down. I'm going to delete this really quick. As price was in that bearish trend, we came down and we hit this strong support level. So now I'm waiting for price to break structure back to the upside. There's only one reason why I'm doing this, and that's if we go to our 4-hour time frame, we can see that overall, what does the trend look like? Let's see how we can get to that real quick. The overall trend on the 4-hour is going up. So what kind of trend are we in? A bullish trend. So I did not mind looking for a buy opportunity. So we're going to go back down to the 5-minute. So since I didn't mind looking for a buy, I waited for price to come down to a very important level, and then I waited for a demand zone to present itself. How do we get a demand zone? We wait for a break of structure. Do you see a break of structure anywhere after 9:30? Anywhere in this zone? If you do, perfect. I'm going to show you where that is. We see a break of structure nice and strong right here. Boom. Awesome. I'm going to zoom in on that just a little bit. Price came and broke structure to the upside. Now, did it break this high right here? Not just yet. It does as time passes a little bit further, but currently it didn't break a major high. So the inverse of major is minor. So we have a major high and we have a minor high. The minor high would be just the next black candle rather than the actual swing high of the market. So though we could have waited for price to break this and then create another zone, we wanted to play a good play right off of this support zone. So we waited for price to break structure here. Price came to this level, broke structure beautifully. So then the opposite candle that made this ginormous push to the upside, we wanted to mark that out as our demand zone. Boom. Our demand zones are for bullish trends, okay? So we tapped a support level, we broke structure, minor structure, not major structure up here. We broke minor structure, and now all we have to do is wait for price to come back down to this zone. We're about to get to the part of our entry now. So now that we had a break of structure, now we can move on to the next step, which is a tap of our zone. We've already created the demand zone. Price has shown us it's moving aggressively from this area. We've marked out the opposite color from the big push and created our demand zone. The only thing we want to look for next is the tap of our zone. Price in the second candle after the break of structure came down and tapped that zone. Now, you can get in from here. There has been plenty of times in my trading journey where I've gotten in aggressively, having a 43-point stop loss, looking for the 1-to-1. Using my long position tool that you can find way over here. Boom, long position tool to kind of help you calculate your risk. But trading NASDAQ, I do not want to take a 43-point stop loss. So I'm going to take more of a safer route in order to take this trade. So I'm going to wait now. We got a break of candle. We got a tap of the zone. So now I'm going to wait for the break of a candle in order to enter. So now I'm going to wait for a break of candle to present in order for me to enter. What does that look like? So that looks like, okay, this black candle came, the next candle next to it broke the high of that candle. So that is where I'm going to enter into my trade and then move my stop loss right above the candle that broke that candle, if that makes sense. So now we're here, we're still looking for the 1-to-1, which is targeting the most recent highs. So it's not a bad place to have my take profit, and my stop loss is at the bottom of this current candle. And sure enough, as soon as price broke above, it had a little bit of drawdown, but it was straight bullish candles to the upside. Okay, we're gonna take a look at a few more. Break of candle entry, we absolutely got that. And then we aim for the 1-to-1. Boom. We're going to look at a few more examples, a bearish example, and I think another bullish example, just to kind of give you a more familiar look of what a break of structure could be and how we're going to enter our zones, as well as how we're going to determine our supply and demand zones. So we're going to zoom out just a little bit, going to the previous day. Again, I don't really trade after 11 o'clock or before 9:30. So we're going to look at another example. First things first, off rip, what do we recognize about the trend of this market? Is it a bullish trend? Is it a bearish trend? What can we identify the market is doing? Right here. Boom. And if you need to, you can look back here as well. Okay, we're going to go from a high to a low, to a lower high, to a lower low, and so on and so forth. So we are in a bearish trend. You got it. What's next? We're looking for a break of structure. Okay, we don't have any support levels. Okay, we do have a support level. Let's see. Let's go ahead and mark that out. We have this level, and we also have this level. Okay, so we're going to go ahead and delete that. We'll delete this as well. We're waiting for our break of structure. Now, with this trend, I'm not going to go back on it here, but you'll definitely see on your higher time frame what it will look like. And overall, even though the trend was extremely bullish, we were kind of in a pullback. So I was definitely still looking for some sells, especially because we were not breaking structure here to the upside. Okay, I'm going to put my support and resistance level here as well. Once we got to 930, candle broke low with a body. We had a low right here, and we had a break of structure to the downside with a body and not really a wick. Yes, it wicked the support zone, and that's okay. You could look for buys if you would like to, and plus we got this minor break of structure here. But in my mind, currently, I was not looking for the buy. You have to keep your mind open and available to be able to react what the market is giving you. And immediately at 9:30, I saw this break of structure with the body. So then I marked out this, the opposite color candle from where the big push happened. And I marked out, boom, a supply zone. If you can read that word, it does say supply, because supply zones are created in a bearish trend. We'll write that one more time so you guys can have that. Supply is for bearish trending markets, and demand is for bullish trending markets. Alrighty, so we have our trend, which is bearish. We have our break of structure to the downside. Now we're looking for the tap of our zone. As we can see, again, price came to this zone and tapped it. Now, again, you can get in aggressively as soon as it gets to this zone. You can enter your position, having your stop loss be way right here at the top of the zone, shooting for the 1-to-1. Price never came down to that, but I would not shoot for that big of a stop loss. Anyways, this is 59 points on NASDAQ. I would never, ever, ever, ever shoot for that stop loss. So another way I'm also going to be safe is to look for my break of candle. So yes, we got the tap of the zone. Now I'm waiting for the break of my candle, BOC, break of candle for my entry. And what does that mean? That means whatever candle is coming back down in the same direction breaks the low of this candle now. So in a bullish trend, we were looking for the break of the high of after the candles have tapped the zone. So now we're going to look for the break of the low after the candle has tapped the zone. So we got the tap of the zone here. Price is still going. Has it broken this high yet? Nope. Price created a new candle. Did it break that high yet? This low. My bad. This candle, this pink candle right here, did not break the low of this candle. So now we have to wait for another candle. Boom. Did it break that low? No. But did the next one? Absolutely. So this candle broke that low. And now we're going to move our stop loss. This is 31 ticks. That's not too bad. You can move it down if you'd like to again. We're going to do it on the entry of that candle, shooting for the 1-to-1. And beautifully, that played out. It almost went. We had a little bit of drawdown on this one as well. But if I zoom in, you can clearly see after price broke structure, tap the zone. We have to be patient, be patient. We got a break of the candle to the downside for the bearish trend. We We got a break of the candle to the downside. Yes, break of candle entry for the 1-to-1. And we smacked TP on that one. Boom. We have one more example that I want to show you guys in hopes that you would grasp this. If you're liking this video so far, go ahead and leave a like, a comment, and subscribe for more trading content. I try to teach you guys what I know and show you guys the experiences that I go through as a day trader. So if you enjoy my videos, go ahead and like and subscribe. If you want to trade with me, I trade Monday through Fridays. You can click the link in the description box below, and we will trade together. You'll see me and I'll see you. Alrighty, we have one more example here. Our 9:30 candle is right here. Boom. Alrighty, so as we can see, to start off, what kind of trend are we in? If you said bearish, you were right. Oh, but are you? Alrighty, this one was kind of a trick question. From the beginning of the night, we were lower, we came up higher. We came up higher, made a higher high. This would be considered that pullback. Technically, yes, that pullback is a bearish trend, but if I'm looking back and I can see that we've been just coming up now, we've just been coming up, coming up, coming up, coming up. Pullbacks are necessary in the market. The market never just goes in one straight line. I was looking for buys in this bullish trend because the start of the day, we've just been going up. So I'm going to look for some buys. So we're in a bullish trend. Okay, what's next? We're looking for a break of structure. Okay, so even from our first example, yes, this is bearish right now, but I'm overall looking for bulls. And I see this low right here, this support right here, and price shot up from the support, came down, never closed below that support. So I'm waiting for a minor break of structure. I'm waiting for a minor break of structure. Remember, we can only create a demand or supply zone when we have the opposite color from a big push. We have somewhat of a big push right here, where we then get a break of candle with a body. Granted, you can take the trade with the wick. I prefer not to because I'm not as confident in those trades that they will have the possibility of playing out. So once we broke above that and this candle closed above this zone, I'm now going to mark this out as my demand zone. Boom. Okay, I'm going to mark this out as my demand zone because, again, supply is for the bearish market and demand is for the bullish market. Awesome. So we're looking for our minor break of structure. Did we get that? Absolutely. Boom. Oh, boom. We got that. So now what's next? We're looking for a tap of our zone. Did we get that tap? We got that tap almost immediately. Beautiful. Let's go ahead and write yes. Okay, so now the only thing I'm waiting for to enter this trade confidently, to let me know that price may actually want to continue higher, is to wait for the break of candle for my entry. So we're going to wait for a candle that has, after the touch of the zone, passed the high of that next candle. So we got this tap. Did we break the high there? Nope. We got to wait. Okay, we came back down to the zone. Did we get a candle to break above that high? Nope. So we're just going to keep waiting. We wait 5, 10, 15 more minutes go by. I'm practicing really good patience right here. And then what happens here? Boom. A high of that candle that has, after tapping the zone, has gotten broken. So I'm going to start my entry here, move my candle. Depending on what the candle is looking like, you can do the most recent candle, which is what we've been doing in these examples, or you can do the full zone. I don't recommend, if you're going to take this full 59 point stop, I recommend going to MNQ, the micro of NASDAQ. Okay, so I'm going to go here. Boom. The bottom of this candle shooting for the 1-to-1. And remember the continuation of this trend. We want to see breaks the structure to the upside. Eventually we do get that, but even our target is a little bit below there, so that's a safe target to aim for, the 1-to-1. So we're here, we got the tap of a zone, we got the break of candle entry, we shot for the 1-to-1, and we dubbed. Okay, so we always want to remember in our trading the 4 steps in order to take a setup. So every time we're looking at the charts and we want to get into our setup and take entries for either a buy or a sell, we definitely want to make sure we go through those 4 steps. Finding the trend. Does the higher time frame trend and the lower time frame trend, the entry time frame that you're trading on, do they align? Are they going in the same direction? If that's a yes, perfect. Second step we're going to look for is the break of structure. Has price broken a minor structure just right next to it, or has it broken a major structure, which is creating possibly a change of trend or a continuation of trend, making a higher high, higher high, higher high, or lower low, lower low, lower low. The third thing that we want to do is we want to wait for the tap of the zone. Now that I've created my demand or supply zone, I'm not just going to take it even if it doesn't touch it. I have to wait for price to come back to my zone. This is not a game where you can just like, oh, I see it and then boom. Like, if it does not come back to your zone, it is not the trade for you. You have to stick to your rules. You have to follow your plan and your strategy. You're going to lose some and you're going to win some. But if you follow your rules, that's a dub day regardless. And the fourth and final step for taking your entries is waiting for the break of candle entry. Again, you can get in aggressively. It's 100% up to you. I recommend getting in at the break of the candle just to be more safe and confident that that trade is going in the direction that you want it to go. Awesome. Well, that's all I have for you guys in this video. Again, if you did like this video, thank you for making it to the end. Go ahead and like, comment, and subscribe, and I will see you guys in the next video.